Hi everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel today, wherever you are tuning in from around the world. Thanks for watching. Today we're going to talk about how we cannot be shaken out. Don't get shaken out on the dips. We buy the fear, we buy the selling the red candles, and we sell the big green candles. We are fearful when others are greedy, and we are greedy when others are fearful. Don't get shaken out. We're going to talk about that. We're going to talk about the charts and look at a whole bunch more. But of course, before we do that, smash the like button. You knew I was going to say that if you're a regular watcher of the show. This does help get this channel out to more people and does help to support the channel, as does all your amazing comments that you leave in the comment section. Thank you so much for that. You take the time to write them. I take the time to read them. And of course, those of you who have asked questions in the comment section, I do get back to those as soon as I am able to. However, if you'd like more immediate access and engagement, you can find me in the Stocks with Josh Discord. Where is that, you might ask? I'm so glad you asked that. If you just click below, there will be a little more button. The description of this video will pop out. There are a couple of links up the top there where you can get started there. And I am in the crypto channel there daily with some of the most amazing people on the planet. There's also a stocks channel, a meme channel, aka the party zone. And of course, I have my own Crown Traders channel there where I share education, insights, resources, some of the trades that I take, as well as entertainment, because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? Okay. And of course, there are a bunch of other links below there, including my Twitter handle, my X handle, I should say, and a bunch of other resources there. So what is the story? Do not get shaken out 10 days before the first pro-crypto president and administration takes office. I think it's 9 days now, but don't get shaken out, because I do feel we've seen a bit of a fake out before the shakeout, before the breakout. Okay. And so, but there are some warning signs, and how do we handle that? You know, for the first time ever, there's been an outgoing transaction from the US government's Silk Road wallet. It appears to be a test transaction of 51 cents, which means they could be gearing up to sell or send or something, or it's just a fake out, or it's just a mistake. Who knows? But just to see that it works, that they want to sell, it would be pretty crazy. It would be a little bit of a, you know, a middle finger to the current incoming administration to sell all this Bitcoin when there is some legislation on the table to make Bitcoin as part of the Treasury, as sort of a reserve for the Treasury. So very interesting there. We'll keep an eye on that. I will say this, that if this Bitcoin is sold, it would be an ants. It would be for ants. Okay, stop panicking. Sit down. These would be scooped up by the ETFs in 1 week. Just totally vacuumed up, like just like the German government. It just came out. You know what will cause the dump? Not the US government selling on, it's the news of it, the fear, the people out there that will just fearfully sell their Bitcoin and then have to buy it back a whole lot higher. Okay, so I'm not worried about the US government selling. I think if this happens, then this is a new, it almost would be better, because then this would be a news piece that would no longer affect the market. There's no more Silk Road hanging over the market anymore. So I just think it would be an opportunity to buy the dip, buy the fear, buy the red candles, and get all your favorite altcoins a whole bunch lower. I just see it as an opportunity. I don't see it as bad news. I don't necessarily see it as good news. No one wants to see that amount of Bitcoin released into the market. But the third thing is that they would likely sell it OTC. I don't really feel the US government is going to sell this via an exchange. When you sell it OTC, that would be like me saying, hey, I want to sell you my Bitcoin. I'm going to send it to you. You send me some money, and it doesn't affect the price whatsoever. Okay, so that's the last thing. Now, of course, indirectly, it could affect the price if we saw people just abandon Bitcoin. But while there is a demand for Bitcoin, and while the ETFs are scooping up the Bitcoin, I don't really see it affecting the price in any sort of way apart from the fear that it brings to people out there. And I'm here to alleviate those fears right there with this little opening statement there. Okay, now also there is liquidity below at 90,000. A drop to 89,900 could trigger over 2.5 billion in long liquidations. If it happens, who's buying the dip? I like this, okay? And so this is what I've been saying all along. This 85 to 89K area is a very, very high area of interest. And I don't think that the dump is quite over yet. Now, look, it might be. It might be, and that's really the question, is there remains a possibility that the drop that we saw just recently was it. But we do have CPI data next week. We have a bunch of other metrics that are being unveiled next week, and then we've got the inauguration. And then we've got the FOMC meeting to finish out January, just to really cap off all the volatility that's coming our way. And of course here, as you see, on-chain data reveals a 12,000 void between 87 and 75 with little to no support for Bitcoin in this range. And yes, I would agree with that. There is not a lot of support at that level. And of course, but we may not come down to that until we come down to the bear market and there's capitulation there because there is nothing there. Because I do think that the bottom of the bear market is probably going to be around $69,000, $70,000. And I'm going to share that in a future video where I share where I think the Bitcoin top is going to be and also how high I think Bitcoin's going to go, the month I think it's going to get there. I might even try and pick a day for you, and also where I think the Bitcoin bear market will bottom out and when. Okay, that's all coming up in a future video. By the way, it's not going to be covered today. We just don't have the time. Okay, so let's look at the Bitcoin charts, and we can see what we see here in the Bitcoin charts. As you can see exactly, this is why I have this volume profile here. And you can see once we get below that, there's really fresh air there down. This is actually called the VRVP. VRVP there. You can add that to your charts there, and you can see there's a lot of fresh air there between those levels. Go to the weekly time frame. Is that going to pop up? Yeah, it does. You can see there's not a lot there. So you can see right down to about 71 actually, starting at 75. But you can see just in here, there's just not a lot because you've got these two massive green candles there. So I actually do think this area is going to get taken out, but I think it will get taken out in the bear market. I actually feel that we should find support now. Now, if we do get taken out in an upcoming dip and dump, that would be a pretty severe correction, but it wouldn't be out of the ordinary. That would be in line with what we've seen in previous Januaries or in previous large corrections for Bitcoin. So I do want to say that there, that I'm not going to be shaken out by that kind of a drop. And it may not happen. And it may not happen. And you don't want to be the person that sells around here and then Bitcoin just keeps going up from here, or just has a little further drop into this 89,000 area and then just takes off and you have to buy it back a whole lot higher. And this is why I do like the two different portfolios. I do trade three, but because the day trading portfolio, I'm in and out, in and out, in and out of trades. And the day trading portfolio is where I have an amount of capital. I go in at a level, I have a stop loss, and then when the price goes up, I take both the original capital and the profit off the table and I completely close the trade. So I'm getting in and out of trade. So that's my day trading scalping kind of portfolio. And then I have my swing trade portfolio, which I kind of call my accumulation method. And that portfolio, generally speaking, is I have a capital and I buy at a certain level, like I might have bought Sui at a dollar on the original swing trading portfolio. And then when it gets up to a certain level, $1.50 or $1.80, I'll take the profits off the table only, but leave the original capital there. So if I put 1,000 in and now it's sitting at 2,000, I take 1,000 out and I leave that 1,000 in. And then when the price drops, I buy back lower and then I sell higher, buy lower, sell higher, and I keep that position open, but I'm taking all the profits off the table anytime there is any kind of rejection there. And then lastly, and if I was trading this with Bitcoin, because we're on the Bitcoin chart, then I would see this rejection here. That is where I take my profit off the table on my swing trade position. That's a clear rejection there. That's a bearish pin bar candle. Not only did I have one opportunity, but two opportunities to take profit there. And then I'm looking at buying back on these candles here. That was a candle wick down in that 92 area, 92, 92. So those would be the areas I would be adding back to the swing trade portfolio. And then I had my HODL portfolio, of course, which I have been buying really since the last bear market in 2022 and 2023, and then the reaccumulation period when I started my YouTube channel back in May of 2024 and was accumulating at these low levels. I was accumulating Potenza Tau at under $200. I was accumulating Sui at reaccumulating Sui at 50 cents and other coins lower. And then I wait until those at least go 3 to 5x. But because I have a swing trade portfolio and my day trade portfolio, there's not the pressure to take the profits on the HODL. I can wait. I don't have to dilute those bags. I can wait, and I may not take profit on Sui until it actually gets to $10. I might lock in my first, and that would be a 10x on my HODL bag. And I do believe Sui is going to get to $25 in 2025, and so that's why I'm holding off there. But of course, I took profits just recently on Sui, and I'll talk about that in my altcoin show coming up. So what do we have here? We talked about the three different possibilities. One, that the bottom is in already from here, and we'll kind of just go a little bit sideways and just move around between 90 and 100,000, just taking out all the different liquidation levels. I think the market makers make the most money that way, but we don't usually make the most money that way unless you have a swing trade portfolio going where you're buying this dip, you're selling these pumps, you're buying these dips, you're selling these pumps with your swing trade portfolio, okay? And so the market makers, I think, are making the most money this way, just keeping it in this range. Now, can it come down to here? You see this 100-day moving average is at 85,600. Yesterday it was just over 85. So every day this comes higher and higher. And if this does come up to this level here around 88, I will be probably moving it, because I have said 85 to 90. But the more this 100-day average moves up, the more likely I am to say, okay, this is really where I feel that it's going to come down to, which is, if it was to be a dump now, I'd say the 85,600 level. But obviously, in a week's time, this is going to be up more around this level here. So 86,000, maybe tomorrow this moving average could be at. Now, it is under quite a few major moving averages there. We do have the tribal trades trend line. We do have the 50 EMA on the daily, which is currently supporting it. So the first thing is, maybe this is the bottom, maybe the bottom is in. Okay, that's option number one. Option number two is that, and that we continue on from here and we slowly work our way up. And then by February, Super Bowl Sunday, we're off to the races and we go and set a new all-time high in February. And I do think we are going to set a new all-time high in February for Bitcoin, by the way. Okay, option number two that I outlined is that the dump is not over and we come down to this 85 to 90K level here, which is 90,000 is here, around this level here, this Fibonacci, this 90,700, 90,800. So we come down and we deviate below the range. Okay, so this has been clearly a range that we came up to, struggled to break through, broke into. So we established what I call the bottom of the range. And this is range trading, where you buy the bottom of the range and you sell the top of the range, which was 100K. Now, we've had a deviation here above the range, and we had another deviation above the range here, okay? So a couple of fake outs and then shakeout, then a fake out, and then a shakeout. And so we haven't really had a deviation below the range. So we could have a deviation below the range into this area here. That's my most likely favored possibility. Now, of course, it may not happen. These are all probabilities. There are no certainties. There are no guarantees. This is just a probability, but this is my most likely probability here is that we do come into the deviation below the range that would make the most sense. We've seen it over here. And you could also say, well, there's a head and shoulders pattern here, which could take us pretty deep. Well, of course, we had a head and shoulders here, a shoulder, and that shoulder didn't play out. So just because it's there doesn't mean that it has to play out. We also have bearish divergence on the weekly time frame. Here you can see clearly the price of Bitcoin is not even in the picture, and then we have a lower high on the RSI, but we also have a slight divergence on the monthly time frame. Of course, here we have it around 78, and this one's a little bit lower at 75, yet the price obviously is much higher than what it was in March when this peak was set here. And remember, I'm giving you a bit of a sneak preview of an upcoming show I have of Bitcoin top signals, that Bitcoin doesn't usually top until it hits at least 90 on the monthly RSI, and that's when you know the top is near. And that didn't happen until back in April, and we saw a huge jump, although we did see a pump up to higher, and that should have been a warning that it was lower, and we had bearish divergence here. But you can see it can take some time to play out. I mean, this bearish divergence on the monthly or the weekly could take many months to play out, but it's there, and we know we are in the final stages of the bull market there, okay? So if we look at all this here, and so the second one is obviously that we come down into this 85 to 90, and then of course the third one is we go deeper down to the 200 EMA and the 200 simple moving average and the 200 EMA, somewhere between the 73 to 78, which remains a possibility. Who knows what black swan event can come? Of course, there could be some more bearish sentiment from the Fed. Already the market has taken a little bit of a dump because of these strong economic numbers that have come out, and they feel that there won't be any rate cuts and there won't be any free money. You know, rate cuts means interest rates come down. People aren't going to have their money earning that interest. They're going to want to take it out if they're not earning anything. If rates come back too low, and they're going to want to put it in something that's going to be moving there. All right, let's quickly have a look at the yellow brick road. Follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And what can we see here is we can see this liquidity above and below. And this is why I keep saying I just think we're going to see more of a sideways chop market here. The market makers can come up, grab a lot of money up here, 24 million above, about 24 million below. We move quickly to the 24-hour chart here, and we do see more liquidation levels, again, equally above and below, 95,000 and then 92. So it wouldn't surprise me if we saw Bitcoin come up a little bit, liquidate those levels to the top, and then just come back down again. Again, 95,000, there's a lot of liquidation. There is a lot of liquidation below here, 92 and 91 and even 90,000. So there you can see now as we zoom out, the yellow really starting to show, but then if we zoom out here, there is a lot here at 96 as well. So I think both of those levels get taken out. I think we both come up to 95, 96, and I think we do come back to that $90,000, $91,000 area to take that out. You can see there's a lot of liquidity at 99,000, 78 million. But before we come back lower, do we come back up higher and hit this? Or are we going to come lower first, grab all that liquidity before moving up? That's really the only question. And you can see with the market makers, there is a lot of liquidity also now. You can see to the upside growing as more and more people go short and think possibly that the bull market is over. There's a huge amount, and I do feel this is all going to get liquidated at some point there. So let me know what your thoughts are. What do you think Bitcoin is going to do? I'd love to hear, do you think the bottom is in already here at the 91,000? Do you think, and now we're going to go up from here eventually? Do you think that there is more lower to come and we're going to hit the 85 to 90K region? If that, then say yes. I think 85 to 90 is incoming. And if you think we're going to go lower into the 70s, I'd like to hear that as well. So you've got the three options, the 80s, the 90s, and the 70s. The bottom is already in. There is going to be more of a bottom, or there is going to be much more of a bottom there. And maybe if you think the bull market's over, I'd like to hear your thoughts and why. That's it for today. Thanks for tuning in. And until the next episode, happy trading.